Hello, everyone. Thanks for joining us today. This is Arjun Vijay from Alpha Street, and today we are speaking with Anshu Bhatnagar, who is the CEO of mPhase Technologies, an EV-centric technology company. Good morning, Anshu. Welcome to the interview.
Good morning.
So let's start with the business, Anshu. Tell us briefly about your business and market opportunity. And also recently you had announced a name change. So maybe touch upon that as well.
Sure. Well, thank you first off for having me. I appreciate the opportunity. And we're excited to tell you a little bit about what we're doing. mPhase Technologies, we've been around for a long time. And really, the company has a long history in battery and nanotechnology. I joined the company in 2019, and as part of that, really with the focus of moving the company from an R&D focused company to a more revenue generating company. So we looked at its IP and patent portfolio that we had, and we decided, there's a good opportunity both in artificial intelligence and machine learning. And as we kind of built this out, a additional opportunity arose on EV charging. So that's kind of really the core of what we do today. And I know it gets a little confusing because we have a lot of other revenue streams that are linked, but really one way to kind of, for investors or your viewers to kind of look at us is kind of look at us as another EV charging company and compare us to what other charging companies are doing. And really the closest comparison would be that of Volta. And if you look at Volta, they're essentially a EV charging company that has a marketing or digital advertising platform. So we're very similar in that where we're a charging company with a consumer engagement platform. So we engage our customers directly as opposed to where Volta might have a digital advertising banner that caters towards the entire sort of community that walks by it. We target advertising towards actual consumers. And with that, I mean, you mentioned the name change. Really the sort of purpose behind that, we've had a subsidiary called mPower for a long time. The company has been building mPower batteries and other products around in the mPower brand, from jumpstart kits to others. And we just felt that name is better suited for where we're moving forward. So one, power is kind of what we're selling. And the second aspect of that is we're empowering customers to make better decisions and live a better life. So we felt that name was more appropriate. So we essentially are basically taking our subsidiary, making that the name as that of the parent. So we think it better suits our vision.
All right, great. To just dive a little bit deeper into that, to an average EV owner, what's the value prospect of charging from an mPower EV Plus network? Because there are so many other options available. So why should he come to the specific charging network?
Sure. No, I think that's a great point. And really where the difference lies today is that most of these charging networks that you see, they provide the user an ability to charge their vehicle. And that's about it. You'll show you where you can charge and where's the closest charging locations. But, I think life is changing and the way people interact is changing. And with the sort of advent of EV or electric charging, people are not going to treat it the same way they did with the gas power vehicles. When you had a gas vehicle, you would go and that would be part of your destination, right? You're going somewhere, you have to fill up gas in your car, where EV charging is now becoming part of the destination, right? So essentially what happens is if you're traveling from point A to point B, you might want to just charge at your destination as opposed to having to find a place in the middle. And secondly, if you are having to charge while you're en route to your destination, you want that experience. You'll be there for anywhere between 30 minutes to an hour plus. You don't want to just sit in your car. And if you have to sit in your car, you want that experience to be a good one as well. So really where we distinguish ourselves is where somebody else might show you that there's a destination to charge, a place to charge. You might be sitting in a parking lot for potentially an hour. In our case, we can actually guide you to the right locations. So if you're en route, we can say, hey, I know your profile, and based on that, you like Starbucks coffee. Why don't you refuel at or charge at the 175-mile mark? You have a Starbucks coffee there. We have 5G connectivity there. So you can just grab your cup of coffee, get some work done. Your kids can download some movies and you can jump on a Zoom call. and have perfectly, so it's really that overall experience, and that makes you a happy customer. But more importantly, from a retail perspective, they end up with a customer they never had. So now you have a happy retailer as well, and it's kind of a win-win proposition for everybody.
Very interesting. And what is going to be the target geographies for this network, at least for the initial phase of rollout?
So what we've done so far is we've announced a couple of major wins. So we've looked at Florida, Illinois, Virginia. We have quite a few other locations in our pipeline. Really what we're looking at is we're trying to get a critical mass, and that way our platform becomes more relevant. It's not as relevant if you only have 5 stations, right? You need to have a sort of critical mass. So you've probably read in our few announcements, we've signed up 1,000+ locations in each location that we're entering, and we'll continue to do that. We're looking at a national rollout, so we are rolling this out nationally, but our sort of target is let's try to get as many locations as possible as we move forward. So Georgia might be the next one, Texas might be another one that's in our pipeline. So we'll be moving forward, and of course California is a big market for us.
All right, understood. Now, Anshu, as you had mentioned earlier, you have a long history of operations, and there was a long period of time when the company wasn't generating any revenues. How has this affected the fundamentals of the company?
Well, the company was still fortunately very R&D focused. So it was something that the company spent a lot of time developing a large patent portfolio that is still very relevant today, right? So we get a lot of interest in that patent portfolio that we do have. But just from a fundamental standpoint, one of the things it sort of did for us is we have a huge net operating loss carried forward. So that's something that we are still taking advantage of moving forward. So as we start generating revenue, that's significant. I don't remember the exact number, but it's over $80 million, which is a significant number as we kind of start moving into both revenue generating and profitability. So we're probably the only EV charging company today that I know of that's actually making money right now. So that's puts us in a good place, and those NOLs help.
All right, great. Now, what should investors expect from the other sides of business that you mentioned? You have this learning, travel, etc., all these verticals of business.
Yeah.
And how does the company intend to take its legacy nanotechnology battery forward?
Yeah, so I think really our core focus is going to be around EV charging. So that's going to be who we really are, right? And we were able to take advantage of some of our existing technologies that we have, like the travel platform, right? So essentially, we're building a charging ecosystem similar to maybe what Tesla has, right? And no other really company does that, where we can not only provide you the whole route guidance, but points of interest around there, where to stay, what to do while you're there. So that's kind of core to our platform. We also had acquired a data analytics company, which gave us strong products such as our own recommendation engine, our own sentiment analysis engine, and others that allows us to drive to make appropriate recommendations. And finally, our consumer engagement platform with the acquisition of Closecomms allows us to engage the customer while in destination. So those are core to our offering. It's really one offering that we have. But around that, what we found was EV charging today, as well as 5G, are both essentially a land grab. And if we have locations, we want to make sure that, which is the hardest thing for somebody to have, is how do I monetize those locations, right? So we're putting EV charging, but at the same time, we're putting 5G connectivity, the millimeter wave 5G, which is, close to a gigabit download speed per second. So both of those essentially become very critical in terms of growth for the company, because, as you're well aware, most people really all they're looking for today is broadband, right? If they have high-speed connectivity on their phone, that's all they care about. They don't need anything else, right? That's their form of entertainment. And if you're stuck at some place for an hour, if you have a fast broadband connection, that's all, you're happy at that point. You can get on your phone, you can get on your laptop, and you're good to go. And same from a retailer perspective. If you have 2 locations, location A maybe it's a Starbucks, your favorite coffee shop, but it does not have broadband or good connectivity. Next to you might be a Dunkin' Donut. Both have good coffees, but Dunkin' Donut happens to have a gigabit download speed, millimeter wave connectivity. Your decision might be, well, I'm going to go ahead and have, coffee at Dunkin' Donuts instead of Starbucks because, that matters more to you. So from a retailer, this is a big deal. From a consumer standpoint, it becomes a big deal. And really, from our perspective, it's a really, really big deal just based on the infrastructure bill that's been passed, as you know. Most of the funding is going between EV charging and 5G connectivity. So we're well positioned for both of those. And the amount of money we can make outside of charging just from CARES 2 Act and from funding that we could provide free broadband to kids. It's a great mission, but we can charge $50 per house per month, sort of in perpetuity, right? So that becomes a very big revenue driver for us at the same time, while achieving a big mission that is a big need in this country today.
All right, great. Just taking that a little bit forward, Anshu, I would be interested to know what are your thoughts about how the future EV charging station would look like maybe 5 or 10 years down the line.
Yeah, no, it's really interesting. I think we're in a fantastic point in our in the world where things are really changing, right? I mean, it's been a long time. I mean, we've had this internal combustion engines for a very, very long time, as long as we remember, and we're at an interesting point where everything is changing, right? With internet connectivity, broadband. And with the pandemic, one sort of change that came out was that people are now beginning to work remotely. The concept of remote work has really, really picked up, and it's probably not going to change completely. Even though people are getting back to offices, it's not. This hybrid work environment has become really where things are moving towards. And now with the sort of shift into EV charging, the car becomes an extension of people's life and where they work. And so what we feel that, call it 5-10 years from now, where essentially the gas station is going to change, right? There's going to be a change in the way people fuel, and each place opens up an opportunity for a lot of different types of experiences. And we feel that each site, right, each location around anywhere you are would be almost a micro experience. People don't want to work from home. Not everyone's going to come into the office, but maybe there's a destination 5 minutes from your house. So if you need to, have a quick meeting, you can go to a place 5 minutes from your house. You can connect your vehicle, you can charge, you can have a little micro experience. If you need to do some yoga or you want to kind of disconnect, you can go to a place another 5 minutes from your house. So we feel that things are going to be, we're in a rapidly shifting world today, and way we do things today won't be what our kids are going to be doing just a few years away. And we feel very fortunate to be in a right place at the right time to take advantage and help guide this journey as we move forward.
Wonderful. That's very interesting. Just one last question, Anshu. What should investors expect from your company over the next 2 years? What is going to be the management's focus?
Yeah, so we're going to continue to roll out. We've been rolling out at an extremely fast rate. We're essentially buying every charger we can get our hands on. So what investors will see moving forward is a lot more announcements for a lot more locations. And as we start rolling out this, both the EV consumer engagement side of our business, I think that should be very exciting for investors. We have sort of near-term plans to uplist to a listed exchange. We meet all the listing requirements, well, other than the stock price right now, but we meet the core listing requirements of shareholder equity. And really, from an investor's perspective, they should look at the company and kind of compare what our peers are doing in the space and realize how undervalued the stock is. And that's not going to be there for very long, especially as we start getting equity research and people start recognizing that if we were going to be compared even the same as our peers, it's anywhere between 70 to 100 times sales. So that's what they're trading at. So we feel that this is probably the best value play as well as growth play. So anyone who's a growth stock investor or a value stock investor, this is a company to look at.
Terrific. We'll just wind up with that. Anshu, thank you for speaking with us. It was really wonderful listening to you.
Thank you. Appreciate the opportunity.
Thank you so much.